You hear it all the time, right? Everyone from slick Wall Street types to your next-door neighbor has a hot take on how you should invest your money. They'll tell you it's complicated, that you've got to be some kind of genius to win, and that you're just one bad move away from losing everything. They'll flash confusing charts in your face, spew jargon, and make you feel like you need to be glued to the market 24/7. But what if I told you that's exactly what they want you to think? That the entire industry is built to make you feel like you need them? In this video, I'm going to slice through all that noise. I'm going to show you the one simple, proven method for building wealth in 2026 that, frankly, they don't want you to know about. This is the strategy that actually works without the stress and without the second guessing. Section 1. The big lie and your real enemy. The big lie they sell you is that investing is complicated. It's a lie that fuels an entire industry that gets rich off your confusion, charging you insane fees to manage your money with secret strategies that usually don't even beat the market average. The truth is, most beginners don't fail because investing is hard. They fail because they're tricked into making it hard. They try to pick the next 10-bagger stock. They try to perfectly time the market, or worse, they get so paralyzed by fear that they do nothing at all. And while you're frozen by all that manufactured complexity, there's a silent enemy eating away at your future every single day. That enemy is inflation. The cash you have sitting in your savings account right now, it's losing its power. The price of everything, food, gas, housing, creeps up year after year, meaning your dollar buys less and less. A savings account, over the long term, is a guaranteed way to lose money. So, investing isn't just about trying to get rich. It's about defending the money you've already worked so damn hard for. Section 2. The simple truth that will set you free. So, if trying to pick individual stocks is a loser's game for most of us, and leaving your money in cash is a guaranteed loss, what's the move? The answer is to stop playing their game altogether. The goal isn't to beat the market. The goal is to be the market. And the way you do that is with two of the most powerful and beautifully simple tools ever created for an investor: index funds and exchange-traded funds, or ETFs. Think of the entire stock market like a giant supermarket with thousands of different products on the shelves. Trying to guess which one or two products will be the best sellers next year is almost impossible, right? Well, an index fund is like buying a shopping cart that already has a small piece of every single product in the entire store. More specifically, a broad market index fund, like one that tracks the S&P 500, instantly buys you a tiny piece of the 500 biggest and most successful companies in America. You get a little slice of Apple, a sliver of Amazon, a piece of all the giants. Just like that, you are diversified. If one company has a terrible year, it's balanced out by the hundreds of others that are doing just fine. These funds are the gold standard for beginners because they are incredibly low cost, massively diversified, and have a proven history of steady, long-term growth. You get all the upside of the market's growth without the impossible job of trying to find a needle in a haystack. Section 3. The strategy that actually works. Okay, so now you know what to buy. A simple, broad market index fund. But how do you actually do it? It's called dollar cost averaging. Dollar cost averaging sounds fancy, but it just means you invest a set amount of money on a set schedule no matter what the market is doing. It could be $500 a month or $50 a week. The amount doesn't matter as much as the consistency. You just set it and forget it. Here's where the magic happens. When the market is flying high, your fixed dollar amount naturally buys you fewer shares. But when the market takes a dive, when everyone else is freaking out and selling, your same fixed dollar amount automatically buys you way more shares at a huge discount. Over time, this smooths out your average cost and completely removes the paralyzing fear of investing at the wrong time. You don't have to guess if we're at a peak or a bottom, you just invest. This disciplined, automatic approach is what separates successful long-term investors from panicked gamblers. So, the secret to successful investing for beginners in 2026 isn't a secret at all. It's not some complex algorithm or a secret stock tip whispered in a back room. It's a formula of beautiful, powerful simplicity. Open a low-cost account, automate your investments into a broad market index fund, and then have the discipline to just leave it alone. If this video helped clear things up for you, please give it a like and maybe share it with one person you know who feels overwhelmed by all this. Thanks for watching, and I'll see you in the next one. This is growth-minded.